now, or what you could do now to assist in this, let's face it, really challenging time. We've assembled a panel of experts. Before I introduce them, I will say, of course, this advice this afternoon is general in nature. Even some circumstances, the legislation hasn't even passed. So we do recommend getting professional advice to circumstances specific to your own needs. But of course, hopefully today we can clear up a little bit of that confusion and make things a little bit more clearer. Joining us today is David Hall, Associate Partner from Findex. Hello, David.
How you going, Wayde?
Very well, very well. We look forward to hearing from you this afternoon. Also joining us, Michelle Morton, Managing Partner from WRG. Michelle, thanks for joining us.
Thank you.
And also Ashley Evans, Director and Lending Manager from AAA Financial Solutions. Ashley, thank you.
Thanks, Wayde. Good on you, mate.
So I guess this afternoon we're going to, a lot of questions we've received from members about JobKeeper. So we'll focus a little bit on that, as well as talking about a number of things in the package that hopefully clears up a little bit of confusion. I want to start with David Hall first. I guess first and foremost, the government has announced a lot of packages. A week ago, or last Monday, they announced JobKeeper. The legislation is yet to be passed. But David, tell us a little bit about JobKeeper and some of the key points in that.
Yeah, so JobKeeper, I mean, I think the intent really is to provide another means of funding those that would otherwise be unemployed because of this. And so they get basically subsidising employers to make those payments. I think when you look at the JobKeeper payment, coming from that concept is it's paying the employer to continue to employ people. Now, one of the things with that is you can have the option to re-employ people, or you continue to have them stood down, but then allocate and treat them as if they're employees to get those payments. And it is $1,500 a fortnight. And basically there are a few little problems there. Look, at the end of the day, you're going to have it'll be monthly reporting. You apply from the 30th of March. It's for 6 months. There's a couple of quirks there around the self-employed people who say have a company, trust or partnership operating.
Yep.
So I'm not talking about employees of it, but the actual owners of the business who aren't normally employees.
Yeah, David, we've had a few questions about that. I guess to be eligible, first and foremost, the business's turnover, if it's under $1 billion, has to have fallen by 30%. And I note that there's going to be a few ways to judge it, because we've had a few people that have asked the question about, well, what if I was impacted by the monsoon event last year? So last year's turnover was a bit lower. So this year, around the first quarter, it's not showing it. How's that going to be treated in relation to that 30% reduction in turnover?
Yeah, look, there's discretion being given to the ATO in administering this, and certainly what I'd be recommending is, in the first instance, apply for it. And basically, at the end of the day, you're going to have to point out that sort of March and April was down because of the floods, and probably lean on the previous year, or even if your months are consistent normally, to highlight that here's what's happening. I mean, there's a lot of flexibility in everything we've seen so far, and I believe the Commission is going to be flexible. I also believe that the sheer workload of the ATO is they're probably going to err on the side of the business, and it'll be later payments that they'll probably pay more attention to. So I guess the point in that is, if in doubt, apply. Now, you touched on, obviously, when JobSeeker came out, there was a fair bit of talk about what about the sole traders, partnerships. And I guess in JobKeeper, those sole traders, those partnerships, those companies that don't actually employ someone, what is there for them in relation to that? Yeah, look, the scant information, the fact sheet doesn't give us anything. The best we've got so far is on business.gov.au, and they highlight this self-employed so we are talking those company trust partnerships where it's the owners of the business who don't employ themselves generally. Basically what they're saying is, if you can show the 20% downturn in turnover, you can you can basically, your one director, one beneficiary or one partner could be eligible for the JobKeeper.
Yep. Okay. And of course, the devil will be in the detail once the legislation is
100%.
passed. But indications at the moment say that if you're in a partnership, one partner will be eligible to claim it. David, anything out there at the moment for what if you haven't been operating in business for 12 months?
Yeah, so that's okay. Once again, if you can show the commissioner that you've got a downturn, as I said, there will be flexibility here, and it's purely up to, if in doubt, apply, show what's actually happening, what you expect to happen. You may not even have the downturn on turnover yet. We're fielding a lot of questions around that where they can see this month in April or May is when they're going to really get hammered, and they can show that, and that's what they need to do.
Yeah. Okay. So the message: apply, make sure your numbers are up to date, so you can actually build the case to the commissioner to show that your turnover has been impacted by that 30%.
Yep, absolutely. Now, just one other thing I have been getting asked is there's a lot of people who employ contractors or subcontractors. They are not employees for this. Okay, those subcontractors are self-employed. They'll have to apply themselves. They're sole traders. The other quick one is casuals. There is a strict 12-month rule. So that casual has to be employed by you for at least 12 months. There was some backing down, but then the governments came out yesterday and reinforced the 12-month rule.
Yep. Okay. And of course, we anticipate that the legislation will go before Parliament tomorrow. So we could be seeing it passed, I guess, in the next week or so.
That's right. It's a joint sitting of Parliament only for tomorrow.
Yep. Okay. Now, I guess anything else that the hotbed questions in relation to JobKeeper that you're hearing out there? If not, we might move on to a couple of other packages available.
Yeah, look, the big thing is, they've got to be currently engaged for you to claim it. And employees as of 1st of March, if you've stood them down, you can re-employ them. If you've made them redundant, you can re-employ them. It is only 6 months. What else? And look, if someone's got dual jobs, you can only get the JobKeeper for one of them.
Yeah. Okay. So if in a situation where somebody's working in 2 part-time jobs, they can only claim it once. And that's where they claim the tax-free threshold with that employer. Exactly
right. The only other thing is things like super support. So if someone's continued to be employed and they're getting paid more than the $1,500, super still, it's just the normal wage, super still required on the whole lot. If, for example, someone's only on $1,000 a fortnight and under this scheme, they're going to get $1,500. There's no requirement for the super on the $500. There is on the original wage. Okay.
Right. Okay.
But if they're actually stood down and they're getting the whole $1,500, but they're still stood down, then there's no super required.
Okay, some very good points in that, David. I want to quickly touch on the pay-as-you-go withholding credit, because we had a few questions about that. Could be up to $100,000, but it isn't necessarily cash. Can you tell us a little bit about the pay-as-you-go withholding credit?
Yeah, look, the pay-as-you-go withholding credit will come through your BAS system. So when you lodge your BASs, okay, and basically it'll be based on your March BAS. Obviously, if it's you're doing monthly, it'll be pretty much similar, but on a monthly basis. But let's say for a lot that's quarterly, it'll be based on 100% as the pay-as-you-go withholding for March, and you'll get up to $50,000, but a minimum of $10,000. Now, with that, if you've got an employee and you actually haven't had to take tax out, you will still get the $10,000 when you lodge your BAS, okay? And it is a credit. But if you don't have any employees and there's no wages at all being paid, you wouldn't get that $10,000. Now, there's a bit of debate out there on that, but the legislation, this is one of the few things the legislation is out and it's passed, and you need to actually have something that's subject to withholding, even if the withholding is zero. Okay. Then there'll be a second payment, which will be in the July to September BAS, which will be in October, which is pretty well up to double the amount. And it's paid as a credit in the activity statement, and it'll be processed from the 28th of April when you lodge your return. So it's not cash in your hand, but effectively it is because you're not having to pay it to the ATO.
Yeah. A good point, and a couple of complexities around that. I guess the message: make sure you know your financials are up to date, and if needed, talk to somebody who can assist you in relation to lodging your BAS and making sure you are claiming the exact amount and what you're entitled to. Because as you said, that minimum claim of $10,000, if you're not, you might in some instances be paying less than that, and you are entitled to the minimum of 10,000 credit on your BAS.
That's right, and it'll end up being 20,000 when you lodge your next. The only other thing I've probably got to mention there is there will be some people who may not have normally paid themselves a wage, and it may be a director where some years they did pay themselves a wage. Gee, should I do this now so I can get this? I think it's, if you can justify it commercially and it is something you do in past practice, then fair enough. If it's something where you're just purely doing it to take advantage of this, the commissioner may come querying it later. The only word of warning I've got there is the commissioner may come along in 18 months' time and they may be less forgiving than, say, now. So don't work on the principle that the commissioner will be all forgiving if you've done something deliberately to manipulate. So if you're going to do something, make sure it's commercial, it's something you've done in the past, it's not something just to take advantage of this.
Okay, and of course, and finally, I know the first stimulus package, there was an investment allowance, but there's potential that if you ordered it before the investment allowance was announced, depending on delivery time, David, they may be entitled to claim that full 100%.
Yep, so a lot of people have probably gone along the principle of if they acquired it before the 12th of March, that they wouldn't be able to take advantage of the 150,000. But, and this is only the upfront 150 deduction I'm talking about, but basically it's all about when it was first used or installed. So you could have gone and bought some equipment and it's sitting there and it's installed post the announcement. That's okay, you can claim it. Okay, so it's first used and installed, not when you've actually acquired it.
Yeah, and of course that's for the tax deduction in relation to the income tax financial year 30 June 2020. Yep. So nothing to be done immediately. It's just to those that have purchased things before that date. If it wasn't maybe delivered or installed for use, there may be an option to claim that in terms of the 100%. So some good insight there, David. Yeah, anything else that's really pressing?
Just one really quick thing with that. You could even have a scenario where, let's say someone's got a crane or something like that delivered and they haven't even put fuel in it to use it yet. And that was purchased prior to the 12th of March. Technically, you could still claim it on that basis. Yeah. The problem's the record keeping to support that argument.
Yep.
Okay.
All right. Yep. So, absolutely. All right, Dave, anything else in relation to some of those measures?
Yeah, look, the motor vehicle depreciation cost limit applies to 150. So your luxury cars, you won't be able to claim the 150. It'll still be limited to your luxury car tax limit, which is the 58,000 plus. The only other thing is there's that 50% new acquisition. So if you can't get under the 150, so you bought something over 150, there's the 50% upfront deduction, and then you would depreciate the remainder of it under your normal rules. And that also that 50% and the instant asset, if you've got assets pooled, you used to be able to just write that pool balance off once it got below this threshold, and that will apply to the 150 as well.
All right. No worries. David, thank you. For those that are with us on Zoom and Facebook Live, if you have any questions, please jot them down. We will have time at the end after we go through all our speakers for a little bit of Q&A. So if you have joined us, welcome to Townsville Enterprise's Zoom and Facebook Live. My name's Wayde Chiesa. With us, we've got David Hall, Michelle Morton and Ashley Evans. Now, time to speak to Michelle Morton, Managing Partner at WRG. Hi, Michelle.
Hello.
I guess a lot that's been happened at the moment with the JobKeeper coming in after JobSeeker. A lot of businesses have stood down and reduced hours for their employees. What exactly does stand down mean, and how easy can it be done at the moment?
Okay, so it's not a provision in the Fair Work Act that we see very rarely being able to be utilised. And the main reason is because when you stand down someone, you effectively just suspend all of their entitlement to ordinary wages. So they're still engaged, they're still employed, but they don't get paid their ordinary wage. And you can enter into an agreement to let the person, whilst on stand down, take annual leave or long service leave. And during the stand down period, you do accrue all your leave, but you can only do that when the employee can't usefully be employed in your business and there's been a stoppage of work. So it is not available to everyone in these situations. It is available in very specific circumstances. So you have to be mindful of that. If you misuse the section and stand down people, you may find that you're going to have a few claims against you, whether or not it's a general protection claim, a discrimination claim, unfair dismissal claims. You've got to be really careful that you've got a situation before you stand down someone that they can't usefully be employed and you've got a stoppage, and then you can stand down. So a lot of people have already taken that step. In certain industries, it's very clear that they've got to stand down. We know that with cafes, restaurants, pubs. So that's good, that's fine. Others have had to take other steps where they might have been able to, by negotiation, to reduce salary or to reduce hours. So they're curious to know, well, how am I going to use this JobKeeper now? So the obvious and easy way to be able to work JobKeeper out is when you've stood down someone or you've terminated someone, you re-engage them, or whilst on the stand down, you'll claim for the $1,500 if you're eligible with respect to the loss in your turnover. What we really need is the detail of the legislation to see what other things employers can do, because some employers will be looking to supplement the costs of the employers. So they'll be looking to continue to pay a set amount, but to receive the $1,500. Others may choose to say, well, by agreement, we're going to pay you X or Y or reduce your hours, but whatever we get from the JobKeeper, some people have decided that they will pass that on. So we need to see the legislation to see how much we can actually do with respect to engaging an employee and paying the $1,500. So it's a little bit uncertain yet. We know the ACTU wanted all of the awards to be changed because though we're making it all sound very easy, employment conditions of reducing people's wages, reducing people's hours and standing them down haven't changed. They haven't really become that much easier. And the awards are quite specific. We've changed a few awards quickly, but most of them are quite onerous with respect to notice and provisions if you can't do it by agreement. So I'm hoping that this legislation makes it clearer with respect to how you can engage for a shorter period of time, maybe up to the $1,500, perhaps, paying either the wages that you would ordinarily pay to that person or agreed to pay, provided, of course, that they're lawful, or perhaps award hours matching the $1,500. So we're not quite sure what's going to happen with that today. We know the ACTU and the government came to some basic agreement, and we know that it's out there with all the industry groups to give their feedback. But that's something that I think we'll have to watch, how more innovative we can be with the $1,500. It's easy to do the stand down and pay. It's easy to re-engage and pay. What I'm more interested in knowing is perhaps the flexibility in the legislation with respect to be able to engage in your employees and for how long, because some people may wish to only engage them up to the value of the $1,500. They may still have something to do. They may not be ones that have been stood down.
So is what you're saying there, where those businesses that have been told to close and they've stood down all their employees or let a number of those casuals obviously not be engaging them, when it becomes clear that they're able to re-engage up to that $1,500, but where it's more grey is, I guess, where a business has dropped turnover of say 40 or 50%, and they're still have their staff employed full time, how they'll be able to structure that, whether they potentially might reduce hours, and how flexible it will be? Because under current award and current Fair Work, you don't probably have that flexibility. Is that fair to say?
Yeah, look, we have always by agreement a reasonable amount of flexibility, but there isn't any quick way to reduce someone's hours or reduce someone's salary. You never go below their award wages. We really need to see what the Fair Work is going to do. The Commission's amended the clerical award, and you can have a temporary reduction in hours with a voting process. Now that's just not practicable. I mean, you can still have it by agreement. So I'm hoping that we've got something that's less cumbersome than, having to vote to reduce hours and things like that for the period of the virus. But we know that we're only going to have a short-term amendment to the Fair Work Act. I just would caution people thinking that the laws have somehow disappeared and that we don't have actions that might still be commenced by people who feel as if they have been aggrieved by a process that doesn't appear to follow the legislation. I think it's important that you are aware of how you are meant to do it and how you can do it, and then work within that framework, because the last thing you want is to be in the Fair Work Commission with actions against you seeking compensation because you've done things which you're not entitled to do.
Yeah, so I guess the message is that legislation is still there. What we're about to see is the new JobKeeper, which is in relation to 1,500, but you still have to go by that original legislation. There may be some amendments, but we're yet to see.
Yeah, exactly. It's not going to be the situation that we all know that we're going to be able to pay $1,500 to someone to work for 38 hours a week or something, unless that's, was an award wage.
What about those that were previously paid less than that? So might have earned $600 a week, and obviously we heard that it's $750 a week. That has to go directly to the employee. Is there discussions around working more hours, or can you do that, or is it about you just pay them the $750? How does that work?
At the moment, we're being told that will be a windfall to the employee. Yep. So if and we can watch the legislation, but at this stage we're told, well, if the employee didn't ordinarily earn the $1,500, the employer claims it and pays it, but there doesn't seem to be any talk about whether or not an employee would have to work more hours to get that. It seems just to be simply an anomaly where there will be a windfall to particularly casuals and perhaps young employees who may only work very short hours and don't actually, a regular and systematic, employed for 12 months but don't earn anywhere near that money. There doesn't seem to be any suggestion that there'll be any provisions which allow an employee to request them to work for longer hours for that $1,500. But we'll have to wait and see.
Yeah, okay. And what about redundancies at this point and during this period? No real changes there. I guess the message, you need to follow the law in relation to redundancies?
Yeah, that's right. I mean, redundancies are often, people naturally prefer a stand down because it just sort of freezes all the need to pay the employee, and what you have to pay, you're going to pay by agreement, which if it's annual leave or long service leave. Whereas if we terminate an employee, well, then we're going to have to look at doing the notice or paying the notice. Then we've got redundancy payments. Small business, less than 15 people, doesn't have to pay redundancy, but over that we do have redundancy pay. So that can have an impact on people's cash flow, and that's something which people have to take into account as to whether or not they would actually want to terminate the position and finalise it and pay out all the entitlements, and potentially, depending on how many they employ, the redundancy pay as well.
Yeah, and for employers that you've been working with generally, Michelle, where are you seeing the issues and concerns for some of the employers out there? I guess it'd be very broad.
So there's a lot of people in that in-between stage where it would be ideal if they could stand down people, and they don't fit within that category. They can usefully employ somebody, but not to the extent of how they've previously employed them. And they haven't got a stoppage of work, they've got a reduction in work. And they're very uncertain as to what that's going to look like and for how long that's going to go. So even when you're making changes, you're doing them very much subject to changes to the government directives, changes to different schemes that might be issued, and also changes to your own environment. So it's really ensuring that when you are recording these changes, that you're giving yourself the flexibility to be able to adapt and change as the market changes, because you don't want to be constantly sort of trying to negotiate all these different changes. So some people will just say, well, that's it. I'm going to pay out my permanents and my full-times, and I'm going to, by agreement, offer casual, because they think, well, that gives me some more flexibility in particular industries to be able to meet the demand that I've got without having to promise to a set number of hours that I'm going to be responsible for. But I think the JobKeeper will give us some more flexibility around that now. So if you once we know how we can use that, at least we're going to be able to budget as employers and employees. Well, look, there's 1,500 that is guaranteed from the government, and then you can work within your own budgeting as to what you can actually commit to with some certainty, perhaps for a bit longer. But I think keeping it flexible and keeping it in writing is really important.
Yeah, absolutely. And just where you have those employees that have gone to JobSeeker because of the stand down, and if a business does want to re-engage them to JobKeeper, how does that happen?
Well, when you are stood down, you're still engaged, you're still employed. And so you can, with the JobKeeper, if you've actually dismissed someone, then you can come back and re-engage them, and then they can go for JobKeeper. And then if you've just stood them down, then we don't know the detail of how Centrelink's going to work. But you'll register as a JobKeeper, and then some internal mechanism either between Centrelink and ATO is going to see whether or not that more appropriately they should then switch to the JobKeeper. But I mean, ideally, I think the government was trying to avoid Centrelink doing the work, and it was hoping that they could keep people away from Centrelink, and that we could just manage the scheme separate. But I think the practicalities are the gap in which people are not going to be getting paid, which, you know, isn't till May from the JobKeeper. I haven't seen anyone who's gone out and got the bank loan to pay the $1,500 starting and is relying on getting repaid from the government. So there is this practical problem of what do the people who are stood down already or terminated already because of the virus do up until we get the repayment back in May.
Yeah.
You know, so they're obviously going to have to go and do the job seeker, because you know that's what's happened. People have had to go off and do that. So, but then we also, the coronavirus supplement doesn't kick in to the 27th of April either. So we've got quite a big lag in real terms in real people's lives with respect to the provision of this money.
Yeah, that's a very good point. And at the moment, I guess we don't have an answer for that. Is that fair to say?
No, I think we know that the employer registers, that the employee has to do all that they can with Centrelink, and we'll just have to wait and see how Centrelink then transfers people who are already on JobSeeker back to JobKeeper.
Yeah, absolutely. Michelle, just finally, I guess occupational health and safety in relation to business and also keeping employees safe in their business, that's still a big focus, isn't it?
Yeah, absolutely. So the regulator has had a completely different change of face in the last year. The amount of penalties and the amount of prosecutions is increasing, because that's the phase that they're in. They've done their education phase and now they're in their prosecution phase. And they've made it quite clear that your obligations to ensure, you know, that someone isn't infected with the virus are continuing, and they're taking it seriously. So whilst you're dealing with all of the issues of, you know, how you're going to employ people, how you're going to pay people, how you're going to survive, you can't forget about your work health and safety obligations. And I mean, there's plenty of stuff on the Safe Work website to help you do this, but you really do have to document what it is that you're doing with respect to advising your people what they have to do to avoid contracting the virus. You really have to have documentary evidence about the distancing, about the washing the hands, washing the surfaces, coughing into elbows, but you also and making sure people who are not, who, if you are still having to come into an office or periodically come to an office, that people aren't attending whilst they're unwell. So all of that needs to be documented, and you need to be able to have evidence that you have actually separated people and done what you needed to do. And it can seem a little bit like, well, the whole world's falling apart. Surely work health and safety will, give a bit of slackness or leeway, but they're definitely making sure that the employers are aware that these are serious obligations, and you're not to forget about those obligations whilst you're going through this period.
Yeah, absolutely. Some very useful information. And Michelle, anything else that is top of mind at the moment? We've covered a lot of ground.
No, I think just, it's probably along the same line as what David said. When you're looking to do or implement a change to an employee, whether or not, they are unwell, they're on maternity leave, they're not performing, all of those things are often quite difficult because you have to ensure that you're not discriminating, that you're not doing it because a person exercises a workplace right, you're doing it because of performance. And these things are still occurring. I mean, business doesn't all of a sudden have perfect employees, and it's just being mindful of making sure that you follow the correct process, that you're documenting your process, and you're not sort of trying to take advantage of the coronavirus. If you're going to make those decisions and, you do have issues with people's performance, then you really do need to make sure that you're following due process and you're not taking advantage of blaming it on a virus when it's got nothing to do with it.
Yeah, some great tips, Michelle. Thank you very much. Again, we're taking questions, so we'll be back with you, no doubt, in the last 10 minutes of today. So thank you very much. I'll move on now to Ashley Evans from AAA Financial Solutions. Ashley, hello.
Hey, Wayde, how are you?
Yeah, very well, thank you. Very well. Now, I guess you've sent through some top 10 tips on how to navigate through this period, and they'll be up on our website. But I guess the first one you've got there is cash is king, and we've heard that before. And even when we heard Michelle talking about that, the cash for the JobKeeper isn't going to be hit bank accounts until May. Yes, it will be back paid, but there is that period, isn't there? So managing cash flow throughout this uncertainty is critical.
Yeah, exactly, Wayde. And look, both Dave and Michelle touched on it. There is clearly going to be a gap. I mean, the government's moving as quickly as possible, but look, just some levers, as I call them, in a business that you can look at. I think if you do have any lending, any of those facilities, whether it's commercial or business lending, whether it's personal lending in home loans and the like, look, the lenders are out there offering deferments, and look, most of them are up to 6 months now. So again, that can just preserve some cash until we start getting some of these government assistance packages through. Pretty much from day one a few weeks ago, we've been fielding a lot of calls every day. Our team of 7 or 8 brokers, and look, the banks, whilst there's a huge workload on, they have been getting through those reasonably quickly. And some banks, CBA in particular, actually had the technology to turn everybody's off. You actually had to opt out of those deferments. But other things that the guys have touched on, talk to your suppliers. Deferred payments, reduced hours, talk to your staff about some wage reductions, basically whatever it takes to pull some of those levers in your business to preserve some cash. Because look, at the end of the day, I guess we just don't know how long this is going to go. I guess there's obviously the government is sort of saying potentially 6 months, but as I say, I believe some business was, I guess, once we can start trading again, your bars and clubs and those sort of things that are an instant income. So you provide a cup of coffee or a meal, they start earning income. But there will be some businesses that have work in progress that perhaps rely on people's confidence to return, people's confidence in their jobs and their incomes, that are probably like, I was talking to a house builder yesterday, and he's still got quite a bit of work in progress at the moment, but that's his concern, is later in the year as businesses are potentially allowed to open again. So that's where cash is king. And one comment we've got here is just don't leave it too long. I think we certainly saw in the GFC, it was a little bit new to us, and I think a lot of businesses took 12 or 18 months to pull some of these levers. I'd really encourage people to sort of consider this, to give them some cash buffer.
Is that the big message out of all of this? Is act now?
I believe so, Wayne. I think that, look, otherwise what you're going to see, some unknowns. Look, I know the government's going to act as quickly as possible, and some of these things, legislation that perhaps traditionally might have taken 6 or 12 months to do, they're getting some of these things through in a week, etc. But just remember, on the back end, I know they are using a lot of their stimulus packages through existing government departments like the ATOs and Q-Rider and departments like that, which I think is wise. But just the physical size of the number of transactions that's going to have to happen, I guess a question mark I've got in my head is how quickly some of these payments are going to hit the mark. So I think act now. If you don't need to use them, by all means, you don't have to, or you can return, with the deferments if things are coming through quicker than perhaps what we thought, or recovering quicker, then by all means we can continue to start making our repayments again and those sort of things.
What are some of the things that the government's doing and working with banks at the moment to assist in this?
Yeah, good question, Wayde. Look, I guess particularly with the lending side of things, there's probably two, without sort of overlapping in the JobKeeper and JobSeeker payments, that's been well covered, but there's been two facilities, lending facilities that one's a state government facility, which is administered through Q-Rider, Queensland Rural and Industry Development Authority. Again, that's a vehicle or a department that is traditionally in disasters, cyclones and floods, those sort of things, that administer these type of loans. So I think that's quite a good decision by the state government to allow them to administer this. In my opinion, I think out of the two loans, this one is by far the most attractive. It's up to $250,000. It was established, I guess, to assist primarily with wage costs, and is limited to 50% of the annual wage expense up to the $250,000. But you can also use it for other working capital requirements, rents, rates, buying obviously consumables, but you can't use it to refinance existing debt or buying equipment, etc. So it's principally a working capital facility. It is 2.5%, which is obviously quite attractive. It is over a 10-year term. First 12 months, there's no repayments. Year 2 and Year 3 can be interest only, and then obviously the total repaid over a maximum of that 10-year period. It is, I guess, in simple terms, it is an unsecured facility, certainly up to $100,000. There is no security required at all, so no bricks and mortar. Anything over $100,000 to $250,000, Q-Rider will require a GSA, which is a general security agreement. It's like a fixed and floating charge over the assets of the business. Again, that's just from $100,000 to $250,000. There will be directors' guarantees, I guess, if it is funded through or the entity as a company. So look, that's number one. Number two is the federal government guaranteed loan. Again, this is up to a maximum of $250,000. Again, principally for working capital requirements, not for purchasing assets or refinancing existing lending. The bank is guaranteed up to half of it by the federal government. So again, yes, it is unsecured. The only issue, I guess, with this particular one is that it is over a much shorter period. It's a 3-year term. The first 6 months are repayments free, but interest will capitalise. So if you were looking at the $250,000, by my sums, it's probably a maximum of $242,000 that you could get. So initially, the first 6 months are repayment free, then the balance of it being paid over 2.5 years. The interest that we are, again, this one's being administered by the major banks. And as we're seeing there, that CBA was the first one. I think National Bank's out, ANZ was out yesterday. Most of the rates we're seeing is 4.5%. Generally no establishment fee or monthly service fees there. But it is subject to the bank's credit assessment. So again, not everybody's going to, I guess, that applies, are going to see an approval, I suppose. But I would just encourage people. Obviously, it's a lot of, it's a reasonable amount of money, but to pay that back within sort of 2.5 years, it's going to take some repaying too. So I guess it depends on the size of your business and your turnover. The Q-Rider one is a little bit you do need to be operating for 2 years or more, so back into 2017, whereas the federal government one is only 12 months. So that is one benefit. I'm doing one at the moment through the federal government because they have only been operating for 12 months. So.
Actually, I guess a few points in relation to those loans with the banks. The major banks now have those loans that are 50% guaranteed. They're all out and can be applied for at the moment. I guess that's from what we see. Yes, it is. That's the case.
Yeah. Look, I think to be honest, I think ANZ was the last one which formally came out yesterday.
And I guess what you're sort of saying is be conscious of the repayments because they're not long loan terms, but could it be used for, like as a short-term loan for those JobKeepers to assist with that, knowing that it's going to be received in May? That's my first question. I guess the second question is in relation to these approvals, how long is it taking banks to be approved? And I guess the third point, you really must make sure all your financials, like your QuickBooks Xero and MyOb accounts, are up to date.
Yeah, 100%. Look, in regards to that, Wayde, look, certainly you do need to be very organised. So you need to have, as much as possible, just treat it as a normal application process. You need to have where possible, your financials done for 2019 and management figures from 1st of July last year through to December 19 would be a great start. Things like a statement of position for yourselves as well. So for anybody involved in the business, just touch on that. I was thinking about this morning. We've got a long weekend coming up. So if you haven't done these things, just take a little bit of time to maybe update some of these things. The other one that a lot of people forget is just an equipment schedule. So if you do have a number of facilities on equipment finance, I think it's a great idea just to have those updated with current balances and those sort of things, how long you've got left on those. So yes, the more information, the better, the more up-to-date information. My business partner Paul actually sent one away, I think last week, and he got an email back from QRider, it was a state government loan, and they said, look, basically if everything is current and that we require. There was no time limit put in place, but they said the next communication will be a fate, so whether it's approved or declined. However, if there is something missing, then we'll come back to you and obviously chase that up. So I guess, as per a lot of these things with applications to the lenders, if you could just, even if it takes a little bit longer, I'd encourage you just get all the information up to date, because once something's put to the bottom of the pile, if you're missing, again, you're probably going to lose a bit of time with those processes. So back to your first question, Wayde, I'll be honest, obviously it's very early days in this as far as timeframes, but from the indications we're getting, look, we'd expect to have these fates at this stage. I'd say after you've lodged it within 7 to 14 days, but please don't hold me to that. It's probably a moving piece, and it depends on their staffing measures and impacts. I do read with interest in the news this morning that Commonwealth Bank was the first one out with that federal government guarantee, and they have linked 170 million already through that. And I think a reasonable amount of that has been in New South Wales from what I was reading this morning. So money is starting to flow.
Yeah. Okay. Anything else in terms of banks? I guess your top 10 tips will be on our website. To sum it up, cash is king. Get on the front foot. Look at your costs and your cost base and how you can reduce that to improve at this stage your profitability. And I guess as well, look at your existing facilities to see if you might be able to use that to cash flow the business until JobKeeper starts to flow on.
Yeah, Wayde, look, I was going to mention that. That's probably for me, out of all of these 10 tips, I think reviewing your existing lending should be right up the top there with some of the other levers like deferring repayments. Some of the success stories, I suppose, one of the guys at work, he's just reviewing a potential client now. and conservatively it's going to be a saving of $15,000 per annum, and that's just reviewing rates, sometimes without being negative here. Sometimes when you're with a lender, and perhaps with a lender for some time, they don't always go about reviewing their existing clients all that regularly. So some of the difference in rates can be a 4 or 5% down to a 3% sort of thing. So can mean a big difference. I'd also, from obviously a lot of people on the show here today are business people. Even if looking at overdrafts, those sort of things, traditionally a higher rate than a term loan. Look at hiving some of that off into a term loan if we've got the ability to do that. That might be a 5 or 6% sort of down to maybe a 3 or 4% potentially. So and personally, obviously a lot of business owners also have home loans and the like. So again, home loans probably should have a 2 or 3 in front of their interest rates today. If we can, credit cards are still at 20%, personal loans are still at 10%, credit cards at 20%. So again, if you can consolidate those into a 2 or 3% one, we're seeing savings of between $500 and $1,000 a month. So I'd really encourage people to go to their broker or to their bank manager or bank representative and ask to have a review. Just a couple of other very, very quick ones. I think communication, I'll just stress that. I guess over the years, a few of us that have been around, I suppose, with many of these different issues and tough times in our economies and tough times with businesses individually over many years. Just communication is king. So get on the front foot with your bank manager, with your broker. They can communicate with the powers to be in the bank, and they can. There's a lot of things out there. This industry has improved a lot, particularly over the last couple of years, and there are a lot of hardship deferments, a range of different benefits that we can use, and I'd encourage people to do that. One or two last ones is debtor finance. A very good point in these tips is that during these tough times, generally businesses will tend to use or lean on their creditors they will stretch each other out longer and effectively in part become part of their banking. So if you do see that, if there is maybe a shortfall in security, debtor finance in a time like this can be a great thing. Basically, you can get up to 80% of your invoice within 24 to 48 hours without providing any bricks and mortar security. So rather than waiting 60, 70, 80, 90 days, you can get that up to 80% of that money within 24 to 48 hours. So keep that on the radar. Right. And look, just talk to your consultant and accountant. We're all here to help. We're sort of trying to keep abreast of all the different packages that are out there, both from a government and a bank. So that would be my last tip there, Wayne. Great.
Thanks very much. Really appreciate that. Look, we've got a couple of questions. We're conscious of time, but we've got a question that's coming here. Michelle, I'll come to you. What happens if employees are high risk, or in the vulnerable group for COVID-19 and they're working in a high risk place? I guess, what are their options? They're saying, the question says that, what if they decide not to work due to fear of being infected? Or number two, what if the employer advises the employee not to work? What are the implications in relation to pay and JobKeeper?
Okay, so employers have obligations to provide a safe place of work. Workers have obligations to ensure that they also watch out for others and themselves. And we have some fairly strict guidelines as to what is necessary to provide that safe place of work. So employers that can't provide that safety, for example, you just can't work 1.5 metres away from each other, it's just impossible, then that starts coming into the stoppage of work. So that starts getting into, you can stand down that person because you can't usefully employ them because you can't comply with the directives of the government and your work health and safety obligations. So once you do that, then you can claim your JobKeeper. If an employee says, well, look, I don't feel comfortable coming to work, and you've been able to put into place all that's reasonable and is in accordance with the directives that we have from the government and Safe Work, then that is the employee choosing not to come to work. And if you're unable to, you might be able to, depending on the circumstances, look at whether you can stand them down. But if it's really not a stand down position because it's a stoppage, then you can agree for the person to go on annual leave. You could agree for them to be on unpaid leave. You can always agree to pay someone when they sit at home too, but that's probably a bit unlikely. So if it's going, you'll still have the keeper, because the keeper doesn't apply when you're just standing down someone. That person's still engaged. They could be on unpaid leave, and you could still apply the keeper.
Yeah, great, thank you. We have this one, I guess, would be to David, or maybe Michelle. A casual employee has worked for 5 months, and the employer wants to retain the employee. So they've changed the contract on the 31st of March and made them a part-time employee. Is the employee eligible for JobKeeper?
Yeah, so you've still got to be an employee at the 1st of March. And so I suppose technically you've passed that they're an employee. Good question. I mean,
the devil will be in the detail.
Yeah, and that's the thing. So the 12-month rule is really about the casual employees. So if you were an employee at the 1st of March and you flicked them to full-time or part-time after that, then one would argue they don't have to satisfy the 12-month casual. Interesting. Watch this space.
Yeah. Okay.
I don't think so.
I guess, Michelle?
I think you have to be eligible as at so that will depend on the legislation, but you actually have to be eligible as at the 1st of March. So if you're a casual at the 1st of March who hasn't worked for 12 months, I don't think and we need to see the legislation, but you've got to be eligible at the 1st of March. So you only became eligible on the 31st. The information we've got at the moment, you've got to be eligible at the 1st of March.
Yeah.
So if you're casual at the 1st of March and haven't worked for 12 months,
certainly you can't under that, that's right.
Yeah.
But it'll get down to the details. So yeah, we have to
see if the
legislation. Tomorrow. Yep.
Yeah, that's right. See what the legislation.
Okay, and finally, conscious of time. Just in relation to cash flow, is there anything in the works for sole traders at this stage? And the question says, we still pay business activity statements, and it doesn't appear that there's any relief or support for those businesses. But I guess the point in this, and I'll open this to everyone, is that's where JobKeeper is going to kick in for those sole traders if they can show that their income has dropped by 30%. Is that the right assessment of that?
Yeah, exactly. So certainly is available to sole traders, and as I alluded to earlier, it appears so even if you're a company, trust, or a partnership. But in those cases where there's an entity, it's only one person's going to be able to get it. So one company director, one trustee, one partner. Now, the only concern I've got with that is it's purely on business.gov.au site. It's not in the fact sheet. No one else is alerting to it, but I assume they've got that from the government. Yeah.
Okay, well, that's we've got a number of other questions, but time has gotten us this afternoon. I guess finally, any quick final points, David? I'll come to you.
Yeah, look, one thing I didn't touch on was the early access to super. So those that are in need, they can get early access to super. They've got till 30th of June to withdraw 10,000. If they're unsure, they can make an application through MyGov, okay, and it'll be assessed through there. But what I suggest, if you're going to do it, take the whole 10,000, but pay attention to how your fund's going to fund it if it's your own fund, because you don't get a second bite until after 30th of June, and you've got a 6-month period to do the two of them, okay? So if you need it, go and do it, because you can always pay it back through concessional or non-concessional contributions.
Right. Thanks, Dave. Michelle, your final thoughts?
No, but I do have a question for you, Wayde. With respect to the Q&A that we've got coming up, what will happen when we end the session for those people?
We'll collate those questions and get them answered and post on our website.
Great, thank you.
So yeah, I'll very good point. Those that have put those questions on, we will answer them and put them on our website in our Q&A section. So thank you, Michelle. And Ashley, any final thoughts?
Yeah, Wayde, thank you. Look, I'd just encourage people to act with that cash flow gap. I'd just encourage people to pull as many of these levers as possible and have some reserves up their sleeve by doing that. So just act fairly quickly.
Yeah, great. All right, that does wrap us up. Thanks for joining us on Zoom. I want to really thank our panelists, David Hall, Michelle Morton, and Ashley Evans. Thank you very much for your time today. We really appreciate it.
Thank you.
Thanks
for joining us as well. I guess the key messages out of today, JobKeeper, the legislation will most likely be passed tomorrow, so watch this space, in particular for some of the intricacies of JobKeeper. If you can, act now, look at your situation, get your information up to date, where you can try and reduce your costs. Get on the front foot with in relation to cash is king, and your lending, and also don't hesitate to talk to your advisor, financial advisor, accountant, lawyer, to if you've got some specific problems that you need answered. We know this is a really, really challenging time, and that's probably, to say the least, an understatement. And I guess the message is very much we're all in this together, and we are more than happy to help. So again, thanks for joining us. We will answer your questions and get them online, and make sure we continue to get this information out to you. So thanks very much, everyone. We appreciate your time.
Thank you.
Thank you.